Good morning, everyone. This is Jim Bird, Chairman of the Board of Legion Capital Corporation. I want to welcome all of you to our annual shareholder meeting for 2022. You're going to hear from the President and CEO of the company, Paul Carazone, here in a few moments, and Paul's going to bring you up to speed on what's going on at Legion, talk a little bit about our 2021 financial results, which were just recently published and filed with the SEC, and also address some general market and other issues regarding the company. I will say, as a matter of preliminary context, the company is doing very well. 2021 was a good year for Legion. The company is growing. We're starting to expand our markets and also expand our revenues. And 2021, for those of you who have seen our financials, was a profitable year for Legion. Certainly, we feel we came out of the challenges associated with 2020 and the pandemic stronger. The team worked very hard to pull us through that difficult time period and indeed make us a stronger company. And those efforts bore fruit for us in 2021, and we're all very excited about where the company is right now. So without further ado, I'm going to go ahead and turn the meeting over to your President and CEO, Paul Carazone, and he'll give you details on the company, its performance, and everything else that's going on with Legion Capital. Thank you.
We're now going to discuss with you the performance of Legion Capital Corporation for 2021. We'll be reviewing the numbers from our audit. We'll be talking about how Legion has performed year over year. We'll be talking about how Legion earns its money. We're going to be talking about Legion's business model. We'll be talking about the assets in Legion's loan portfolio. And we'll also be talking about general market factors that affects our company. In 2020, Legion generated money from its standard business segments: interest income, participation fees, and other transactional opportunities. In 2020, the company generated a little over $2.2 million in those revenue segments. In 2021, I'm pleased to report that our financials showed those same income segments generating well over $4 million in income for the company. And we're pleased to see that this trend is continuing with our business and look forward to how we perform as a company throughout 2022. And we are feeling very confident as to how our company will perform in 2023. Again, as a business, Legion makes money through our specialized loan portfolio. The core component of that is our interest income, but we also make money in fees and through transactional opportunities and where we're able to make capital gains and other types of income from our business activities. The way Legion makes money is we take funds from various sources. Specifically, we have something we label as Legion Direct. We have something we call the loan platforms where we source capital. But most of our money these days comes into our company institutionally from our broker-dealer networks and through our Reg A funding, which in the past 2 years has really been the backbone of our source of capital for the company. About 2 years ago, we started our Reg A activity, and it ended 2020 with approximately $3 million in funds that had come to us institutionally. And at the end of calendar year 2021, you can see that our company had in excess of $30 million in such institutional funds. As we look to the remainder of 2022, we fully expect that this Reg A, which has now been approved by the SEC as a $75 million offering, we are anticipating that will be fully funded out in the coming months, and we are actually considering issuing a second and perhaps a third Reg A as we look to the next 18 months of our business operations. The funds that Legion brings in, predominantly institutionally, are used to populate our lending activity. The core business of Legion is to interact with the Florida marketplace and find opportunities where we can place our capital in a safe and secured opportunistic structure. Because of our unique position and our interaction with the marketplace through brokers, our own relationships, lending into other lending institutions, we see daily different opportunities to deploy those funds. And on a daily basis, these opportunities are reviewed by our underwriting and our loan committees to see what opportunities we want to present internally to consider deploying those funds. The funds that we do deploy are structured again in secured, loan documentations, typically a first mortgage position. And the coupon on those loans ranges on average between 10 and 12%. On top of that, though, Legion looks to generate fee income, and we do that through finding opportunities and structures where we, in essence, get a success fee from the underlying transaction that we're supporting our clients with. This allows us not just to generate a 10 to 12% yield, but typically a yield well up into the teens for our shareholders. This is our core business. This is how we make our money. You've heard how we source the money, and you've heard how we've been able to improve our financial position year over year between 2020, 2021, and as we reach a midpoint here in 2022, I'm pleased to report that we're continuing the trend of increasing our revenues and increasing our profitability. Another thing I'd like to touch upon is the overall market that we are all looking at in today's world. In this post-COVID environment, in this difficult supply chain world that we live in, there are inflationary pressures, there's talks of a recession, we're watching massive stock market swings, and there's a general nervousness as to what to anticipate as to what's happening in sort of the national economy that we all live and work within. A unique position for Legion Capital, though, is we're Florida-centric in what we do. And looking at Florida as a sub-economy within the United States, the first thing you should look at and consider that differentiates Florida, and specifically Central Florida, are the historical trends in population. Population, and to some extent tourism, generates a lot of the economy in terms of what we see and work in every day. To give you some general numbers, in 1995, the population of Florida was approximately 14 million people. Currently, it's estimated that the Florida population is somewhere in the neighborhood of 22 million people. Those numbers alone tell you the dynamics of the population growth in Florida, and it comes from all sorts of segments. But any research on Florida will tell you that Florida is the #1 destination in the United States for population migration. Because of that fact, because of the international attractiveness of Florida and specifically Orlando, we see the Florida economy being driven on a daily basis by population, not by expansionism, not by bear markets, not by bull markets, but specifically driven by the economy associated with increased population and the never-ending desire for people to take vacations and experience Orlando and other parts of Florida. So as we look to the business of 2022 and we look to business for 2023, we also do want to be sensitive to the other side of the market conditions that I want to address, and that is interest rates. We're seeing huge changes of interest rates, many of which the people listening to this have probably never seen before in their lifetime. The Federal Reserve has 3 times this year, in March, May, and June, significantly increased the Fed funds rates. So less than a year ago, we were looking at a cost of funds, driven by the Federal Reserve to the interbank offering rates, translating into the prime rate, of very, very low numbers. But in the last year, those numbers have increased by almost 2%. Today, we're looking at a Fed funds rate of 1.75%, and it's anticipated by many experts that that rate is going to go up again in July. What does that mean to the average business that is looking to seek traditional bank financing? Most people know that the prime rate, or what the prime rate is, the rate offers by banks to their best customers, is driven by the Fed funds rate. And many people know that typically the difference between the Fed funds rate and the prime rate is 3%. Take what the Fed funds rate is, what you hear on TV or what you read in the newspaper or see online, add 3% to it, and that really sets what the prime rate is. So if you look into the Wall Street Journal or you look at JP Morgan Chase, you'll see that their advertised prime rate right now today is 4.75%. And pundits are anticipating that that rate is going to go up again in July. Fed funds rates will go up, prime rates will go up, and the cost for businesses is going to go up in terms of borrowing money and leveraging their business activities to generate their income, much what Legion does. We lever our business, we get our funds institutionally, we deploy those funds, we make a spread, we make money for our shareholders. The reason I wanted to focus on this topic, though, is for Legion in the relevant range, and that's year on year and looking out for, say, the next 18 months to 2 years. Legion has a fixed cost of funds. Our cost of capital, driven institutionally, can pretty much be planned for. We know those costs. The marketplace, which we are in competition every day for business opportunities and unique deals that we like to put together, it's changing. It's changing because various factors that we've also already discussed are putting upward pressure on the cost of funds for other people to do business. And as we watch that prime rate increase, we know that even a good business actively involved in some sort of construction, wholesale, real estate dynamic is typically going to be borrowing funds not at prime, but maybe at prime plus 1 or prime plus 2, depending on the credit risks and how banks see them. And the point that I wish to make here is that differentiator for us in business. When we go out to do a project and we're quoting our cost of business to somebody and putting our loan documents together, for the last few years, our number has been somewhat static. And you've heard the reference earlier to that 10 to 12% cost of funds plus a success fee coupon. What we're seeing in the marketplace right now is a lessening of the gap between Legion's cost of funds and the marketplace cost of funds for other borrowers out there. And I wanted to sort of end on that point because I think this speaks volumes as to how Legion differentiates itself in the marketplace and is well poised doing what we do, growing our portfolio, carefully curating the types of deals we do, and now seeing an economy, for the reasons we've already talked about, making Legion's product and Legion's business let's just say, a little bit more interesting for the world relative to the cost of funds that other people are paying. And with that, I'm pleased to say it looks like our numbers for 2022 are doing quite well. Our loan portfolio historically, not more than 30 months ago, was at $11 million. We ended 2021 with about $24 million outstanding in our portfolio. We've already crossed the 40 million mark this year, and we believe that our business is going to continue to grow profitably, and that our core business model of growing a successful business to hundreds of millions of dollars in our portfolio has a good foundation. We have an excellent group of team members, and we couldn't be happier with the shareholders who are taking this journey with us. Thank you very much for your time.